Welcome back to the Traders Network Show and our continued coverage of the 2019 Greenwich Economic Forum. I'm Matt Bird.
And I'm David Nelson.
And we're here live in Greenwich, Connecticut. David, we've got a lot of stuff going on in the market right now. I've been quarantined here on the floor interviewing thought leaders as they come off the panel. What's going on in the market right now?
You know, probably the biggest news of the day has to be the Walgreens potential LBO. When you start to run the numbers for this, if this actually happens, it's a rumor at this point, but it looks like they're talking, KKR is involved. With interest rates this low, it's a possibility, but you're talking about the largest LBO in history. So there's a lot of question if something this big could be done at this time. For Walgreens, it's probably a smart move. This is a company whose stock has really lagged the markets over the last 5 years.
What are the polar outcomes here if it goes one way or the other?
Well, I guess it's a push if nothing happens, because Walgreens will be what it is today. If they can actually get through something like this, obviously the banks will love this. This is investment banking fees. But Jefferies was out with a note today. They're very skeptical on this. It's a very large deal, and it would require certainly not one firm. It would require probably 4 or even 5.
You know, it's actually, this deal is a bit of a theme here at the Greenwich Economic Forum. What are some of the mechanisms at play?
Well, certainly it's interest rates. I don't even think this discussion would be taking place if the risk-free rate wasn't as low as it is. And it's really been, the risk-free rate has been the dynamic of the market this whole year. It's certainly been about the Fed. And I think what's happened largely this year is the Fed undid a policy mistake from last year. They've as much admitted that. And the markets probably wouldn't be where they are today if rates weren't as low as they are. I think what we should probably fear is what happens if rates start to rise and valuations stay where they are. Then it's a problem.
Here's a thought for you. The deal goes through, Walgreens succeeds. What would come after that?
Then the question is what goes into the Dow? What replaces Walgreens would come out? Wow. So maybe the obvious one would be CVS. That would be a possibility. They actually reported a very good number today. That would be an easy one to translate, but there are some that would like to see, you know, some of the household names that everybody loves, an Amazon, possibly a Facebook, but the stock prices are very high, and given how the Dow is calculated, it'd be very difficult to put an Amazon in there. They'd have to come up with a new mechanism.
That's amazing. And for the retail market, should this be something that you should be looking at? How would you speculate on this?
You know, I heard one speculation this morning that suppose this deal falls apart.
Yeah.
What might Amazon do? Amazon stepped in and got a retail footprint with Whole Foods, and they're very involved in the healthcare space. Certainly Jeff Bezos is. He's got a consortium, I think, with others on this. What if they stepped in and grabbed another retail footprint as a distribution center for, say, just healthcare drugs? It's way out there. It's outside the box, but amazing. It's a possibility.
It is a possibility. And what would that mean for Amazon?
Well, it's funny how everything's come full circle. You know, everything went online, and here's the biggest online company in the world, and they're trying to go back onto the street and get a retail footprint. They've done it with Whole Foods. We'll see if they want to do another one.
I think what Amazon's doing is really interesting. It's they're actually bringing smart technology back to retail. The brick and mortar model was fundamentally inefficient, and the web and technology supply chain made things more easier to transact via the web. But now we're getting back to, it's recoiling back like anything else.
It's a distribution center. Yeah. That's how I look at it.
Yes.
And it's a place to help deliver that, you know, an hour delivery, you know, or maybe you go to the Walgreens to pick up something that you ordered 15 minutes ago.
Yes, I see that. We'll
see. It's a rumor, but we'll see.
I like it. All right,
okay.
So let's leave it there.
Okay.
We'll come back. We got the panel's leaving out. Why don't we come back and we'll pick this up on the next topic.
Sounds good.
Sound good? You're watching the Traders Network Show. We'll be right back with these messages. Don't go out.
The 2019 Greenwich Economic Forum is brought to you by Bridgewater Associates. Meaningful work, meaningful relationships. Churchill Asset Management, Nuveen, a leading provider of senior and unitranche debt to middle market companies. Ropes & Gray, bright past, brilliant future. Aurora Capital, inspiring partnerships. And Gramercy Funds Management, we are emerging markets. Special considerations to Bank of America. Life's better when we're connected. Noah Private Wealth Management, a leading wealth and asset management service provider in China. Guotai Jinan Futures, a leading brokerage firm for commodity futures and financial futures in China. China Industrial Securities, a comprehensive financial group providing full-spectrum financial services in Hong Kong. And Titan Advisors, built like a hedge fund. Special thanks to the Financial Times and Greenwich Business Institute for hosting us. Special thank you to 1-800 Public Relations for all your PR and media support. And thank you to all the sponsors who helped make this event possible. We'll be right back